the property sector is facing a dynamic landscape with new challenges and opportunities emerging in 2024. Now, from Metro Manila's 6-year residential inventory clearance to the rising demand for green office spaces, let's take a deeper dive into how stakeholders are navigating a mix of optimism and caution. Today on Follow the Money, we welcome Joey Roi Bondoc, Director for Research at Colliers International Philippines, to share his insights into pressing issues and the road ahead for the industry. Good to have you back, Joey. Thank you so much for making time for us.
Yes, of course, Rain. Happy New Year.
Happy New Year and good morning. Now, with about 154.4 billion pesos worth of ready for occupancy or RFO inventory that is yet unsold. So is this a sign of oversupply? What does this mean for developers still building more? What kind of issues, or should it be a sign of economic caution? Do you think that such figures affect the confidence of both small investors and home buyers?
Yes, definitely, Rain. We have an oversupply in Metro Manila right now, especially when you talk about the unsold ready for occupancy units. But I want to highlight that the problem primarily lies into the mid-income segment. So this is the 3.6 to 12 million pesos per unit, 154 billion pesos worth of unsold inventory in the Metro Manila condominium sector. And about 57% of that is from that mid-income segment. The upscale luxury segment only accounting for 5%. What does that indicate? There's still a very good take-up for the higher price condominium units. But for the mid-income segment, this is the sector that is struggling at this point. Why? Because of elevated mortgage rates. Interest rates are still high. And of course, the central bank has been cutting interest rates, but the impact is likely to be felt across the residential sector mid of 2025 earliest. So it will probably take a bit longer before we see the full impact of that interest rate reduction into the residential market and having a positive impact and eventually stoking demand, especially for the mid-income condominium segment in Metro Manila.
Meanwhile, would you describe it as a bubble or a property bubble here in the Philippines that's just burst?
We do not see it as a bubble that is about to burst the rain. Why? Because while we see an oversupply in Metro Manila, developers are now starting to turn off the supply tap. What does that indicate, and what does that mean? For example, in the Metro Manila residential sector, launches for the first 9 months of 2024 down by about 60%. And completion will likely be at about 8,000 units every year from 2024 up to 2026. This is much lower compared to 13,000 units, condominium units completed every year from 2017 to 2019. Of course, you can argue that during this 2017 to 2019 period, this was positively influenced by the POGO demand. But we no longer have the POGO sector right now stoking and reviving demand in the condominium sector. So it's really the foreign investors, local buyers that are fueling take-up in the Metro Manila residential sector. But I think, Rain, what I want to highlight here is that while we see tempered launches and take-up in Metro Manila, we see the shift to suburbia, meaning developers are launching more horizontal projects, house and lot only, as well as resort and leisure-themed developments outside of the capital region. And I'm talking about regions including Central Luzon, Calabar Zone, Western Visayas, Central Visayas, Davao, and of course, Northern Mindanao, including Cagayan de Oro.
That's an awesome insight, actually, especially as you mentioned resorts and leisure-themed properties, because in ASEAN countries like Thailand and Vietnam, they're seeing faster recovery in tourism and property markets compared to the Philippines. Now, Manila has only 65,000 hotel rooms compared to Bangkok's 75,000. Do you see the Philippines as being able to possibly catch up competitively in attracting foreign investments into this sector?
Well, we see that Rain, because if you look at Metro Manila, we are projecting the completion of about 2,300 new hotel rooms from 2025 up to 2027. And what's interesting is that of these rooms, 40%, nearly 40% are foreign brands. So we now see the likes of Accor, Ascot, Mercure, Banyan, all these foreign brands, Radisson, for example, that are expanding their leisure hospitality footprint across the Philippines, not just in Metro Manila, but even in key destinations, the thriving, the rising destinations, including Panglao in Bohol, that will have a GW Marriott. You have Dusit Princess in Cagayan de Oro, as well as Bukidnon. So these are outside of the traditional, the most attractive known locations such as Cebu, Bacolod, Iloilo, Davao. But we now see more thriving locations. Why? Because these foreign players are taking advantage of improving hotel occupancy. In Metro Manila, occupancy is 63% from 20% at the height of the pandemic. And we believe that given that the government is setting its lofty goal of 12 million international arrivals in 2028, there's really tremendous opportunities for foreign brands to proliferate and continue expanding their footprint across the Philippines.
Right, and offline we were already talking about the proposals of the government to review the current ownership and lease agreements with foreign brands and foreign investors. How do you see this as potentially affecting the property sector here?
It will have a very positive spillover impact on the property sector, Rain, because if you look at the industrial sector, you have foreign manufacturers that are investing massive capital, billions of dollars. Texas Instruments, for example, $1 billion for their expansion. You have St. B, Gigafactory, a manufacturer of electric vehicles. And of course, since they invest billions of dollars of capital, of funds into the Philippines, they want a longer lease term for their properties. And we believe that this land lease bill currently pending in Congress will do positive wonders, benefits for the Philippine property sector, especially industrial segment and even hospitality. You have foreign brands, for example, such as Four Seasons. They want a longer land lease term whenever and wherever they invest. So hopefully, once this bill is signed into law, I believe that it is already at third reading, both chambers of Congress, and will likely be passed before the busy election campaign season. It will help attract more foreign brands, including Four Seasons. So who knows? We might see new Four Seasons. I understand that the government already announced they are already in talks with Four Seasons, and that is another interesting brand that will be added to the Philippine leisure landscape.
All right, Joey, in our last minute, just two remaining questions, and probably very quickly. Green office spaces, is there still a push for sustainability, especially in which sector? Plus, perhaps looking at your outlook for the property sector, are there still gaps that perhaps the private and the public sector need to fill to be able to prop up the property market?
Definitely, Rain, because we believe that right now the office market is seeing challenges. The vacancy in Metro Manila is 20.5%. That is the highest that we have ever recorded. But we believe that the demand for green, sustainable, healthy office space will help revive demand in the Metro Manila office segment. You have 1.2 million square meters of new office space that will be completed across the capital region from 2025 up to 2027. And about 60% of that, or about 720,000 square meters, are considered green, healthy, have green building certifications. As we always say at Colliers Philippines, sustainability is every Filipino's responsibility, and green is in. You have a lot of multinational companies, large Filipino firms that are highlighting their ESG goals, sustainability initiatives. And we believe that, for example, if you're a parent company of a BPO that is located in a healthy office space in the United States, you need to walk the talk. You need to ask your subsidiaries in the Philippines to also be located in this green, well, LEED certified office spaces. So this is one trend that we're likely to see moving forward. Green initiatives will be the norm beyond 2025 and will really play a pivotal role in reviving demand in the office space sector.
All right, good reminder right there. Joey Roi Bondoc, Director for Research at Colliers International Philippines. Grateful for you sharing your expertise and fearless forecast. Thank you so much.
Thank you, Rain.